42.81%. That's the price change as regards the all share index from year to date, 42.81%. And the market closed last week. We're going to find out what really happened in the market as of last week. And we're going to be taking a look at also the Nigerian capital market. And we've witnessed a landmark year in 2025 with banks taking the center stage as regards equity listing. Geregu Power also on the news again. We're going to be examining what's happening with the Geregu Power, the third quarter performance, 2025 performance. It reinforces its reputation in the Nigerian energy sector. We're going to find out all of this on this episode of Market Watch. This is Market Watch, brought to you by Nairametrics Television. I've got amazing gentlemen, Idika Aja and also Mukhtar Mohammed, joining us for this episode. You're very much welcome again.
Thank you, Frank.
Yeah, it's Monday. Monday is the first business day of the week. A lot of people always, first thing that comes to the mind of investors, what is my portfolio doing? How is it performing? And let's start with the all-share index, the Nigerian all-share index, the ASI. It closed the trading week. The trading week ended, that's last week, 10th of October, firmly in the green. What is your take about that? 93 trillion naira. That's the total market capitalization of the market. 2.37 weekly gain as at the end of last week. What's your take about how the market has been performing? I'll start with Dika.
Yeah, last time we mentioned that the growth, of course, is expected. If you look at the change in macroeconomic variables, which is likely traditionally will affect the stock market. I mean, in terms of the cut in MPR, which normally will now bring down reduce the yield in fixed income, and that people will at least start migrating to stock. And above all, the stock market has done very well this year compared to last year. The influx, which can be attributed to a lot of factors. Young ones now coming in, to trade with fintech and everything. Yeah. So people are getting interested and the awareness is coming up. That could be the reason. And we're likely to see more of that.
So we had 2.37 weekly gain as of last week. And all of this is against the backdrop of trading volume quite low. Well, what's your take about that, Mukhtar? If you look at trading volume pari passu, the gains.
Yeah, Frank, I'm not like Indika that believes so much in the all-share index. I always say it, but again, it's a way to average your investment and let you know whether your portfolio is doing very well or not. So for that, I think I agree with that. But also generally look at the all-share index and you begin to invest. I'm of a different opinion. When you look at sales, sales volume low, then closing the green, then it talks a little bit of positivity depending on which side you are. Yeah. If volume is low, that means a lot of people are still seeing value, a lot of people are not selling. And then it was in the green, and it was not like it was losing, and people are saying, no, we don't want to sell again so that we won't lose, but it was on the green, and again, sell volume was low. So that's positivity to the market. That shows that a lot of people still believe in the market and what they are holding, the investment, all the stock that they are holding. When you look at that again compared to performance, you realize that last week performance was largely driven by high cap stocks like Dangote Cement. So it helped that index, and also Nigerian Brewery also really performed very, very well during that last week. So definitely those are high cap stocks that have really helped the index. And also don't forget that RIDL also did a little bit better performance. But even if you saw towards the end of the week, there was a slowdown moving a little bit lower. So all these have helped the all-share index to where it is. So if you are a holder of any of those portfolios, then you are excited that you've really been able to make a little bit of profit. I mean, for me, the good thing is that a lot of people are not trading, trying to say we are not seeing a lot of stocks on offer, and then we are seeing that sales volume. So that tells you that a lot of investors are still holding up to what they have, and that means that they believe that there could be an upside again.
What's your expectation for this week? Going into this week, what What sector do you?
My expectation is high when you look at the consumer goods sector. Like Indika said last week,
Yeah,
we've only gotten PZ results out. We've not seen Cabri, we've not seen Nestle and others. And hopefully, if you go by what we've seen in the first and the second quarters, and then what we see in the exchange rates now, it's still going down, then we are excited about what we think those companies will perform. Also, we've not gotten, I don't think we've gotten the third quarter result of MTN also.
No.
So
they have not released their results.
We are waiting for that also. That also could drive the market in the ICT, both MTN and Airtel. A lot of people don't seem to talk about Airtel, maybe because of the price. So a lot of people are looking at MTN. So that's my sentiment. And then hopefully, this week we might get that long-awaited result. It could also be a game changer in the financial sector. In a half-year result of Access Bank that has lingered up too long. I've never seen it stay this long up to like this. Then Fidelity Bank also, we also are waiting for that. They have already submitted their result. They told us they approved interim dividend, but they've not gotten the final approval from the CBN. That could be a game changer for both Fidelity Bank and Access Bank. If those results are approved and then the investors are excited, that could also change the narrative in the financial sector of the market. And don't forget also the third quarter result also. We should be coming out from the banking sector in any moment from now, from tier 1, tier 2. Knowing that this third quarter is not like the audited. So
true.
We expect to get it early. So for me, those are my what I expect this week to be. It will be mixed. I think it will be mixed. But again, those results will determine where we end this week with.
This year has been a landmark year. If you look at what has been happening as regards equity listings, 2025 has been the greatest year so far for equity listings. And the banks are taking center stage. Now, out of 3.6 trillion naira of equity listings that we had this year, 2.1 is from the banking sector. Do you see this as a major driver as regards do you think recapitalization was a major driver as regards the entire capital market and taking a look at it from the broader market outlook?
Yeah, I think so. I think so because even when you look at where the banks were in terms of their share capital and share premium and what they're expected to have by the end of first quarter 2026. Yes, as a matter of fact, we are looking at give and take. We're looking at the bank will raise as much as 4 trillion naira. By the time they finish their recapitalization. So, and that is actually what is driving the listing, that huge amount you are seeing them. Because some of them have met their recapitalization requirements in terms of, okay, we're okay. Some have raised their share. They are only looking at it from the point of the share capital and share premium, not the total shareholders funds, and which is core capital, tier 1 capital, which is very, very good. So yes, it is the banks are driving the huge amount you are seeing there in the capital market in terms of new listing.
So do you think this would how do you think this would impact the economy? Because capital. Every economy wants money. And right now we're raising you said 4 trillion is what the expectation,
around that
exactly.
Yeah.
Do you think this it will impact the Nigerian economy at large?
It's already impacting the Nigerian economy. We have number one, we have more players in the equity market now, especially the younger generation. I think I said something about that. That's one. Secondly, also we've seen the stability in the exchange rate. A lot of people are not tying that to this inflow of capital inflow from the recapitalization of this bank because we have a lot of foreign participation in the either Nigeria in the diaspora or foreign fund manager that are also participating in this bank.
True.
That's why a bank like GTB has listing in London Stock Exchange. So that has helped bring down exchange rate. And now because of that also, you can now use your Naira card also to be able to buy things abroad and even withdraw cash through ATM. All these are because of the kind of liquidity, and this liquidity that we are seeing is largely driven into the Nigerian economy by the recapitalization of the bank. So for me, yes, it has created a good aura around the Nigerian economy. And then second, again, it has also, whether I like it or not, provided jobs again for some Nigerians because of the recapitalization, that a lot of people are employed to drive that recapitalization, to meet you and me, to want to invest in the market, and also the informal sectors who are benefiting.
Oh yeah.
Remember that they also have input in terms of printing of those prospectus, but now we've gone digital. Yes, you can also see that again in the NSE index. A lot of people are now beginning to go. They also feel it online. That also helping technology. So the impact has been huge. And like Indika said also, he said something. He said this just capital. We're not talking about shareholder funds. The bank are awash with a lot of shareholders for in terms of liquidity.
Yeah, true.
So that tells you that what the banks are paying today, they can comfortably pay even after the recapitalization of the bank. Though there's that fear in terms of dilution.
Yeah.
But when you look at the profit margin of these banks, Dika said something about FCMB last week, about 30% growth in the past 5 years. And I don't think they are increasing their shareholders by almost 30% in terms of outstanding shares. So
yeah, they are actually the growth is equally much when you look at what the banks, the positions they were in especially in, let's look at 2023 and now in terms of that core capital, share capital and share premium. But for me, my take there, why I'm keenly interested in there, because this money we are looking at about that 4 trillion. You remember, it is not customers' deposits.
Yeah,
this is pure capital.
Yeah.
So I think how the banks deploy the funds matters a lot.
Yeah.
How they are going to deploy the fund matters a lot.
And that is my challenge, Indika.
Yeah.
That's my major challenge. Because I like saying I'm a student of history.
Yeah.
Remember when we had this recapitalization then, and the then CBN governor, Chukwuma Soludo, said no Nigerian bank will ever go under, because we are awash with a lot of liquidity. At that time, 25 billion was a lot. And we saw these banks begin to take high risks, and we saw what happened eventually. And I also blame that on the regulators. When you are trying to build a $1 trillion economy, what I ask, do you have $1 trillion regulators?
Mm-hmm.
That for me is the major challenge that we have in this recapitalization. When you're talking about pure capital, now will this capital really be invested in the real sector? Remember what happened after the first recapitalization? A lot of banks saw gold mine, the oil and gas. Everybody became a player of the oil and gas. They were retail oil and gas players. They were the major oil and gas player, and just a tip of rock on the price of this oil and gas crisis that happened there. We saw how it impacted negatively on the bank.
Very
so
true.
My problem will say be, do we have $1 trillion regulators to really regulate these banks in terms of what they will invest this money in? And now that these banks are holding companies, if you look at some of these banks now, what they are telling you is that the holding company is the one that investing in the banks. And if you look at the cash cow of the holding companies are the banks also.
Yeah, very true.
So we need to look at all that.
I think, I agree with you, Mukta. Where they have to, I think that's my opinion.
Yeah,
is yes, that will give them the opportunity to invest in the real sector that you really mentioned. Especially for me, the manufacturing sector. That is where the bank can now build the bedrock that can now power their deposits.
very true.
Because if they do a planned lending for that sector,
yeah,
maybe like synergy. Like I said, there's synergy either with government.
So you think it's
whereby you create clusters, because now you have good capital, not depositors' money, that can even give you that longer window to hold.
True.
So that is where the bank can now say, okay, fine, can we now structure a credit plan where we can now support build the risk sector. I know even CBN has a lot of scheme where they partner with. I think they ask the bank, okay, keep certain percentage of your funds for like anchor borrower scheme, something like that. Where they now, where they can now invest. But I think the CBN and banks now, with the emergence of this capital, they should partner again. Particularly, I'm interested in seeing them build manufacturing clusters, whereby, Frank, like you are as an entrepreneur and manufacturer, you just work in where amenities are provided. So one bank will now have the opportunity of building a background that can now sustain their deposit base, especially their retail base. And that can equally reduce the risk of impairment, of borrowers not paying. Because when you bring people together in a cluster, provide the normal amenities they need, it will be very easy, one, to monitor them.
Sure.
Then it will be very easy for you to recover your money. I think if they can walk along that line, instead of maybe waiting, okay, the environment is the risk environment is high, most of them will sit down and say, okay, let us put the money in government instruments. Government instruments. Already, at last report they did about all I think the total asset of the banks, about 35% of it are owned by government. So if they can move away from that, I say, okay, let us just keep this money and put it in fixed government security. That will be okay. That is where, my opinion, I think they can now deploy the money.
Okay. Geregu Power, solid performance based on their results. Third quarter 2025 performance. It just reinforces their reputation in the power industry. What's your take? Double digits profit growth, remember? And their balance sheets, I'll use your words, strong balance sheet.
Yeah. When you actually look at...
do you think it's sustainable?
Yes, you actually look at, when you talk of a strong balance sheet, there are certain indicators you use. You look at especially the leverage, the liquidity. You understand? So if we can use the two of them, liquidity and leverage. And I think although they are leverage, that's what we call the equity multiplier, increased to 4 points. That means for the asset they have, it's almost it's about 4 times its equity, and which increased from 5 point something to 4 point something.
Yeah.
But the most important, and even if you are using leverage, what happens to your return on equity? So if you are using leverage, at least your return on equity must be high, and which they achieve. They have a good return on equity. Secondly, their current ratio, which you use to measure liquidity, is okay. Anything above 1 means that's okay. That means they can be able to sustain their current liability from their current assets.
Yeah.
So which is okay. So on that balance sheet side, it's okay. It's strong enough to carry them.
What's the major risk facing Geregu Power?
Cost of sales. Yes, cost of sales.
Yeah, natural gas. Yeah, he's right. That's the major risk they are facing. Natural gas, and I think they are spending about 60% of that natural gas, which is taking about 60% of their revenue.
Yeah.
So which is high.
And that is not about to go down. And if you look also during what we have seen happen the past 1 week, high cost of gas shortage due to the strike that was embarked upon by
Nupeng.
By Nupeng, yeah.
So
and even affected the household gas too.
Yeah, true.
So you can't rule them out. So we could see that also playing out.
But didn't they factor all of that, knowing fully well? If you look at our appropriation bill, you remember that we always have what we call oil benchmark price. So you factor all of that into consideration, looking at the global economic landscape.
When you're talking about oil benchmark, it's all about prediction, praying that no black swan event happen. So if any of that happen, definitely you have no control over it.
Yeah, true.
And so, but like he said, if you say, oh, how prepared they are, like he said, they have liquid, they are very liquid in terms of liquidity. You can see the imperial charges, so it's very low. It's just about 7%, which is also very, very good. The asset base that also improved. And I didn't see them borrowing from a financial institution in those reports. I don't think so. Most of they have
their debt increased marginally to about 23%,
but their
23 billion thereabouts.
Yeah, their shareholder fund.
Their shareholder fund is greatly influenced by retained earnings. I think that has about over 80% of shareholders is from retained earnings, which is okay.
Then you look at primary way of their profit by about 89% of that also coming from their core business. That also is key. When you have a lot of your profit coming from your core business, that shows
that's
that
energy cell.
The energy cell, which is their core business, that tells you that that also is good. I mean, they've been able to address a very huge challenge that they've always had, which has to do with energy thief. So I think they've improved on that.
Yeah, but aside that, I think where I see a little challenge is their receivables and the payable, because their receivable is a little bit high. You understand, up to 170 billion of their total current asset of 180. So if you look at it and check their payable, you can now see that receivable is higher than the payable. So that means they are not collecting. I know, although which is normal thing because of the peculiar challenge we have in that sector.
Yeah.
So if they're able to manage their receivables and payable, because the receivable is higher than their payable.
Yeah.
So ordinarily they should be able to use their payable to now finance their receivables. But now their receivables account is higher than their payable. Is a little snag that will now put pressure on their working capital.
Yeah.
But aside that, it's okay. The 9-month result is okay. Growth in terms of revenue, profits, and the balance sheet is okay. It has a very strong financial position.
Geregu Power, equity listings, and the performance of the market last week. Those were the conversations we had on this episode of Market Watch. You never can tell what we're going to be talking about next on Wednesday. It just might be the next company that you might be interested in investing in. That's what we do on Market Watch, brought to you by Nairametrics Television. My name is Frank, and I'll see you on the next one. Make sure you like, share, subscribe. Cheers.